But the one which is actually thumping ahead and is the one which is leading the Nifty today has been Reliance. Surges over 2%, the top contributor on the way up to the frontline index after positive commentary coming in from Goldman Sachs. Now it's in fact extended its rally by about 0.5% or further. It's 2.5% higher near the high point of today's trading range. What is Goldman Sachs saying about Reliance? Hormaz joins in to detail that note. Hormaz.
A pretty interesting note there from Goldman Sachs. They've maintained their buy recommendation and they have increased their price target to 3,400 from 29.25 earlier. Remember, UBS had come out with a note last week itself and they had ascribed a 3,400 rupee target as well. So it's the highest target on the street for Reliance. But the interesting bit here is that their bull case for Goldman Sachs is projecting a 54% upside for Reliance Industries by FY26, and that is coming up to a price target of 4,495. And they're saying that the consolidated returns of the company are at an inflection point. Now they are highlighting 4 key growth drivers, and they are each of Reliance's businesses. First up, they talk about the telecom business, which they are forecasting into turning into a strong free cash flow generating business, and they expect Jio Platforms to generate $12 billion in cumulative free cash flow over FY25 to 27 compared to just under $2 billion that they generated over FY22 to 24. They come to the retail business as well. They say that the retail business is entering a phase of steady state expansion and rising return ratios, but they say that the EBITDA margins are unlikely to expand from here as the mix is shifting towards groceries. But 3 years of aggressive expansion has given Reliance the dominant lead in the offline grocery retail market. Now the oil to chemicals business as well, there is a multi-year refining outlook. They say that the chemicals business has bottomed out. Then they're saying that the leverage over the petchem margin recovery, Reliance has leverage there because of the cost leadership and the capacity expansion that they have undertaken. And they also speak about the new energy business, where they say that the hyper integration will drive higher returns as well, as the capex may be spread across 2 phases and cash generation from the current energy business will be enough to fund the capex of the new energy business. Now Goldman Sachs is saying that despite the run that Reliance has seen, the risk reward still remains favorable. They say that they are expecting sustained returns inflection over the next 3 years. They have a strong pipeline of catalysts going forward, and they expect the market to focus on the company's leverage, which is expected to go down going forward as well. Now some of the key risks that they are highlighting: lower than expected refining and chemical margins, lower than expected ARPU, and a lower than expected market share and margins in the retail segment. So overall, a very positive note from Goldman Sachs. The stock is up and about, lead contributor to the Nifty upside today.
Okay, all right. Thanks a lot for that, Hormaz.